Hello everyone, my name is Farhan. Today you will solve 6 questions for the topic non-current assets and depreciation. These questions are complicated in nature and they're designed to help you practice for the main exam that you will take. Make sure to focus and follow through the entire content for excellent understanding. The questions are on the left-hand side of the screen, and on the right-hand side of the screen you'll see all the workings which I'll explain step by step. So with that being said, let's begin. Right. So starting with question number 1. A firm has the following figures in the trial balance at 1 August 2023. So here you can see that we're given two types of assets, which are the plant and machinery and the motor vehicles. And we're given the relevant cost and the accumulated depreciation for these assets. During the year ended 31 July 2024, the firm purchased a commercial printing equipment costing $36,000 and disposed a motor vehicle which cost $80,000 in January 2021 for $24,000. The question is asking you to find the total of non-current assets in the statement of financial position at 31 July 2024. Right, so we understand based on the second paragraph of the question right underneath the table that we have just purchased a new asset, and that new asset is a printing equipment. We paid $36,000 to buy this printing equipment, which refers to the original cost of this asset. Now, based on the depreciation policy for this firm, which is to depreciate all assets over 4 years with the full year's charge in the year of purchase and none in the year of sale. So what does this mean? This means that although the printer was purchased during the year ended 31 July 2024 without any specific date when it was purchased, we just know that it was purchased in between 1 August 2023 and 31 July 2024. So given that we know it was purchased in between this time period, you are to apply a full depreciation. And the method of applying the full depreciation is to depreciate it over 4 years. So if I want to calculate the depreciation during the period 1 August 2023 until 31 July 2024, you just simply divide the original cost of $36,000 with 4. And that gives us $9,000 per year. Now, you want to find the carrying amount of this new printing equipment at the end of the financial year 31 July 2024. And how do we do that? A carrying amount at any given point in time for any non-current asset is simply the difference between the original cost and the total or accumulated depreciation. Now, what is the original cost? The original cost is $36,000 and the total depreciation so far in the first year of usage is $9,000 based on our calculations we have done earlier. So that gives us a carrying amount of $27,000 at end of 31 July 2024 for this new printing equipment that we have purchased. Now we have to look into all the other types of assets that we have, including the one that we have disposed. So let's look into the plant and machinery that we originally had in the books. Now, to begin with, in the first row of the table, you've got the plant and machinery with a cost of $160,000 and a total or accumulated depreciation of $44,000. So if I want to calculate the depreciation for this old plant and machinery, I simply divide the original cost by 4 based on the depreciation policy that is given in the second last paragraph of the question. Now, the reason I'm dividing with 4 here is because this is 4 years. So $160,000 divided by 4 years gives us a depreciation of $40,000 per year. All right. So on that basis, the carrying amount for this plant and machinery that we have in the books should be the original cost of $160,000 minus the accumulated depreciation of $44,000, which we had at 1 August 2023, and then you subtract an additional $40,000, which refers to the depreciation for the most recent 12 months in between the period 1 August 2023 until 31 July 2024. And that gives you a total carrying amount of $76,000 for the plant and machinery. All right. Now we want to look into the asset that we have disposed. And based on the requirements of the question, we understand that we have disposed of a motor vehicle which cost $80,000. And that motor vehicle was purchased in January 2021 for $24,000. Okay. Now, the purchase date of this motor vehicle is January 2021, and the cost on the money we paid to buy this was $80,000, right? Now, we understand that the depreciation policy of the business we are working with is to apply a full year's depreciation in the year of purchase and not in the year of sale. We also understand that we are working with a business which has a financial year ending 31 July, which means the financial year should start on 1 August of the prior year, right? Now, on that basis, in the first year, which refers to the day of purchase of January 2021 until 31 July 2021, in that first year, we'll be applying the full depreciation, right? So year one falls in between Jan 2021, when the asset was purchased, up to 31 July 2021. Year two starts 1 August 2021 and would have ended 31 July 2022. Year three would have started 1 August 2022 and would have ended 31 July 2023, right? Now, depreciation on an annual basis or per year or per annum is simply the original cost of $80,000 that we know divided by the 4 years useful life based on the requirements given in the question in the second last paragraph. And on that basis, we get a depreciation of $20,000 per year. Okay, so based on the policy, we depreciate every year, but not in the year of sale. So if we have got 3 years in total, so that means the total depreciation is $20,000 multiplied by 3, which is $60,000. Okay, now you might wonder, why is it 3 years and not 4 years? Now think about when year 4 starts. Year 4 would have started on 1 August 2023 and ended on 31 July 2024, which is basically the current financial year of the business. And we understand the policy of the business is to have no depreciation in the year of sale, right? So that is why we're not counting this year 4 as something that we have actually going to include in our calculations, right? So the total depreciation for 3 years based on our assessment so far is $60,000, which is $20,000 multiplied by 3. Now, if I want to find the carrying amount before disposal for this motor vehicle, is simply the difference between the original cost of $80,000 minus the total depreciation of $60,000, which is $20,000. Okay? Now, what's next? Next, we have to look into the other motor vehicles that are remaining at cost in the books. Now, the cost of the motor vehicle that we removed is $80,000, which means the remaining motor vehicles in the books is simply $120,000, which was the original balance that you can see here, minus the $80,000, which we have just disposed based on our calculations from the previous part. And that leaves us with remaining motor vehicles at cost of $48,000, all right? Now, what is the depreciation policy of the firm? To depreciate all assets over 4 years. So if you want to find the depreciation now, you just simply divide this remaining cost of $48,000 over 4 years, and that gives you $12,000 per year. Okay? Now that is calculated, you want to find the carrying amount at 31 July 2024 for all these remaining motor vehicles. Now, all these remaining motor vehicles has an original cost of $48,000 based on the separation between the asset that we disposed and the amount that we initially had at 1 August 2023. And then I'm subtracting $12,000 for the depreciation that we have incurred in the current financial year. What about the $16,000? Where is this $16,000 coming from? Now, if you check the balance for the accumulated depreciation at 1 August 2023 in the table that is given to us, how much does it say? It says 76,000. Okay? We know that during this financial year, we got rid of a motor vehicle. We disposed a motor vehicle. And what was the accumulated depreciation of that motor vehicle? Based on our calculations, on 3 years, we have a total depreciation of 60,000. So from the 76,000 that you've got, you have to must subtract the $16,000, which refers to the removal of the asset that we've already got rid of, and therefore that leaves you with an accumulated depreciation of $16,000. Make sense? All right. So If I want to find the carrying amount for all the remaining motor vehicles at 31 July 2024, I start with $48,000, which is the original cost that was remaining, minus the $16,000 of depreciation that relates to these remaining motor vehicles, and then subtract an additional $12,000, which is the depreciation expense we have incurred in the financial year starting 1 August 2023 and ending 31 July 2024, and that gives you $20,000. Okay? Now, let's read the last line of the question, which is the main question. What does it say? It says, what is the total for non-current assets in the statement of financial position, which is your balance sheet, at 31 July 2024? Right, so what is that going to be? So that is going to be $20,000, which is something that we just derived based on the remaining motor vehicles, plus the plant and machinery. What about the plant and machinery? So the plant and machinery had a remaining carrying amount of $76,000 based on our calculations. And then we have got $27,000 as the carrying amount of the new printing equipment, right? So altogether, the calculation is going to start with $76,000, which refers to the plant and machinery. So I'm just going to write P&M in short, plus an additional $27,000, which refers to the new printing equipment that we have purchased, plus the last calculations we have conducted on the motor vehicles that are remaining, and that is $20,000, which refers to remaining motor vehicles. So altogether, how much is the final amount? So the final amount is $123,000. So your correct answer is option number B, or the second option. All right. All right. So if that is clear, now let's move to the next question. All right. So now let's begin with the second question. So in the second question, Tom purchased new machinery for his factory costing $80,000 on 1 September 2020. The machinery was expected to have a useful life of 4 years and a residual value of $8,000. Now, what do we understand by residual value? Now, residual value simply refers to the likely amount that we can receive if we were to sell this asset at the end of its useful life. So basically, after you have utilized the asset, after you have consumed all the economic benefits worth $80,000 from this asset for 4 years, you can sell this asset for $8,000. That is like a prediction that may happen in the future. Then you have got on 1 September 2022, which is 2 years after the purchase of this asset, modifications costing $12,000 were made to the machinery, and its useful life was extended by a further 2 years with no changes to its estimated residual value. Tom uses the straight line method of depreciation on all assets. The question is asking you to find the carrying amount of the machinery on 31 August 2023. All right. Now, so let's see what's going on. So let's look into the workings on the right-hand side. So based on the requirements given in the question, we understand that we're depreciating on a straight line basis. So when you have got the cost and the residual value and the useful life, how do you find the depreciation? The depreciation is calculated by simply finding the difference between the cost and the residual value divided by the useful life. So the cost in this case is given to us as $80,000. The residual value is $8,000 and the useful life is 4 years, which means the depreciation per annum is $18,000 or per year or per annum, the same thing. Now, we know that we purchased this asset on 1 September 2022, okay? And up to 31 August 2022, we have got 2 years that have passed. And in those 2 years, the total depreciation would have been $80,000 multiplied by 2, which would have given us $36,000. On that basis, I need you to calculate the carrying amount at end of 31st of August 2022, and that would have been the difference between the original cost of $80,000 minus the total depreciation for 2 years, or the accumulated depreciation of 2 years of $36,000, which would have given us a carrying amount of $44,000. Now, why did we find the carrying amount at the end of the first 2 years of usage? which is on 31st of August 2022. Because based on the requirements of the question, on the 1st of September 2022, we modified this asset. We modified this asset and the cost of modification was $12,000. So when we are modifying an asset, we're essentially adding value to that asset, okay? So if you're adding value to that asset, then the new value for this asset should be the carrying amount that you originally calculated at end of 31st of August 2022 of $44,000 plus an additional $12,000, which gives us $56,000. And this is the value that is relevant from the 1st of September 2022. Okay? So when we have done this extra modification of $12,000, what happened based on what the question tells us is that the useful life was extended by a further 2 years with no changes to its estimated residual value. Right, so what does that mean? So from the 1st of September 2020, the original date of the purchase, up to 31st August 2022, 2 years have passed, okay? And then on the 1st of September 2022, we modified this asset by adding value worth $12,000. And after that modification, the useful life increased by a further 2 years. So what's happening in the first 2 years that we have used the asset, and then after the modification, that useful life is extending again by 2 years, which means we actually have a useful life of 4 years again, right? All right, so the original useful life was 4. Then we are subtracting 2 years up to 31st August 2022. And then we're adding 2 years again because of the modification we have done. And that actually gives us 4 years of useful life again, starting 1st of September 2022. All right. Now, if you want to find the depreciation on an annual basis, starting 1st of September 2022, is the difference between the new cost of $56,000 minus the residual value of $8,000, which is still unchanged based on what the question tells us. And then you are dividing with the useful life of 4 years. So on that basis, you get a depreciation of $12,000 per year. All right. Now, from 1st of September 2022 until 31st of August 2023, 1 year has passed. So if you want to calculate the carrying amount now, it is simply the difference between the new value of $56,000 after the modifications were done minus the $12,000 for the depreciation expense that we have incurred, which gives us a new carrying amount of $44,000 at 31st of August 2023. And that is the answer for this question. Okay? All right. Now, if you're clear with question number 2, let's move to question 3. By the way, you should be able to download this file that I'm using from the link in the description. Okay. Now, let's check question number 3 now. Now, a machine was purchased on 1 September year 1 for $52,000. This machine had an expected useful life of 8 years and an estimated residual value of $4,000. On 31 May year 6, the machine was sold for $35,000 cash. So this $35,000 selling price is basically referred to the disposal proceeds. So what's the meaning of disposal proceeds? Disposal proceeds simply means that when you got rid of this machine, or when you sold this machine, or when you disposed this machine, you received $35,000. Then the financial year for the business ends on 31 December. So which means if the financial year ends on 31 December, then it definitely means the financial year starts on 1 January, right? Now, the company uses the straight line method of depreciation, and a 4 year's depreciation is charged in the year of purchase and none in the year of sale. Calculate the profit or loss on disposal of the machine. Right. Now, we know we're using the straight line method for 100% sure. So on the right-hand side, you will see that we've first calculated the depreciation. And again, because we're using the straight line method, we're using the formula for the difference between the cost minus the residual value and then dividing it with the useful life. So the cost is given to us as $52,000 and the residual value is $4,000. The useful life is 8 years, right? So on that basis, we get a depreciation of $6,000 per year. Now, we depreciate this asset for 5 years. Why 5 years? Because the question explicitly mentions in the second last line that a full year's depreciation is charged in the year of purchase and none in the year of sale. So we know we purchased the machine in year 1 and then we sold the machine in year 6. So year 1, year 2, year 3, year 4, year 5. So we've got 5 years. So you have to find the total depreciation for 5 years. So the total depreciation of 5 years is simply $6,000 multiplied by 5, which gives us $30,000, right? Now, how do you find the carrying amount? So the carrying amount is simply the difference between the original cost and the total depreciation. The original cost based on the first line of the question is $52,000. And the total depreciation for 5 years, or the accumulated depreciation for 5 years, is $30,000, which means the carrying amount is $22,000, right? Okay. Now, the disposal proceeds, or the amount we have sold this machine for, was $35,000, which means the economic benefit that was left in the machine prior to disposal or just before disposal is $22,000, right? And then we ended up selling it for higher, which means we have definitely made a profit because we sold it at a higher price compared to what it originally was worth, okay? So if you want to find the profit on disposal, it's simply the difference between $35,000 and $22,000, which is simply based on logic, and you understand that the profit on disposal is therefore $30,000, all right? So the answer for question 3 in this case, which is the profit on disposal, is $30,000. And this is a profit because the carrying amount was $22,000 that was left as the economic benefits for consumption or utilization within the business for revenue generation purposes, but you ended up selling it for $35,000, which means you ended up selling it for more, and the amount you sold it for extra was $30,000 more. Okay? All right. So that takes care of question number 3. So now we can move to question number 4. All right, so what's happening in question number 4? So our delivery van was purchased for $36,000 on 1 May in year 1. The delivery van has been depreciated at 20% per year using the straight line method. The delivery van is expected to have a 0 residual value, which means you're not going to be able to sell this delivery van at the end of its useful life. The company charges 4 years depreciation in the year of purchase and no depreciation in the year of sale. The van was traded in for a replacement vehicle on 1 July in year 4 for an agreed figure of $6,500, which is also referred to as the disposal proceeds. Now, the first requirement of the question is to calculate the accumulated depreciation before disposal, which is referring to finding the total depreciation right before selling the van. Now, so we understand that we're using the straight line method, right? And the straight line method rate, the depreciation rate is 20%. So if you want to find the depreciation on an annual basis, then you simply multiply the given rate of 20% with the cost of $36,000 based on the first line of the question. So on that basis, the depreciation is $7,200 on an annual or on a yearly basis. Now, the question clearly mentions that the company charges a 4 years depreciation in the year of purchase and no depreciation in the year of sale. Now, we know that we have used this machine in year 1, year 2, and year 3, but we sold it in year 4. So even though we used it for some time in year 4, given that we sold it on 1 July, we still do not depreciate it in year 4 based on the policy that is mentioned here, which the company adopts, which is to charge a 4 years depreciation in the year of purchase and usage and no depreciation in the year of sale. So when it comes to finding the total depreciation, we will do it for 3 years because we are selling it in year 4. So we do not worry about calculating the depreciation for year 4. So the total depreciation for 3 years is simply the annual depreciation of $7,200 multiplied by 3, which is $21,600, right? Now you want to find the carrying amount before disposal. And this is something you must do every time you're disposing an asset. And that is basically the difference between $36,000, which is the original cost, minus the total or accumulated depreciation of $21,600, which is $14,400, okay? Now, the first question asks you to calculate the accumulated depreciation before disposal, which is something we already figured out. For 3 years, it's actually $21,600. right? Okay. Now, in part two, you want to find the profit or loss on disposal. And that is the main reason why I asked you to always calculate the carrying amount right before disposal for the asset. And based on our calculations, the carrying amount was 40,400, which is the difference between the original cost and the total depreciation that we calculated earlier. Now, the disposal proceeds is 6,500, which means we sold this asset for a significantly less amount than what it was worth. We had $40,400 worth of economic benefits for consumption and utilization within the business for revenue generation purposes. But we ended up selling it for a very low amount, and that is 6,500, which definitely is indicative of a loss, right? And what is that loss on disposal that we have made? It's simply the difference between the carrying amount and the disposal proceeds, which is rational and logical. And then you get a loss on disposal of $7,900. All right. So the answer to first part of the question, which is to calculate the accumulated depreciation right before disposal, is $21,600, the depreciation for 3 years. And the second part of the question, we have made a loss on disposal of $7,900. You didn't make a profit. All right. Okay. Now, with that being said, we can now move to question number 5. All right, so let's start with question number 5. So Bright Tech Limited purchased machinery on 1 July of year 1 for $40,000. The company's financial year ends on 31 December, and its policy is to apply a full year's depreciation in the year of purchase. The machinery is depreciated at an annual rate of 25% using the reducing balance method. By 31 December of year 4, what will be the carrying amount of this equipment? All right. Now, we are basically going to look into the process of finding depreciation under the reducing balance method. And I'm going to walk this out in multiple steps, which I need you to focus and understand thoroughly. So every time you've got a question with reducing balance method, you get full marks. Now, starting with finding the depreciation in the first year, which is the year 1, every time you're working with an asset that is in its first year of usage, although you're using the reducing balance method, you're free to apply the given percentage on the original cost, which is 25% multiplied with $40,000. And we do not have to make any adjustments with regards to how many months it has been used in a given year, because the question explicitly mentions to apply a full year's depreciation in the year of purchase, which means you can simply multiply 25% on the original cost of $40,000, right? So that gives you a depreciation of $10,000 at the end of year 1. Now, every time you're using a reducing balance method for calculations, always find the carrying amount of the asset at the end of the year after the depreciation has been calculated. So we want to find the carrying amount at the end of year 1, which is the difference between the cost and the total depreciation so far, which is $10,000 only in the first years of usage, and that gives us a carrying amount of $30,000. Okay? Now, why did we calculate this carrying amount? This is the difference between the straight line and the reducing balance method. When you move to year 2 and you want to find the depreciation in year 2. So if you want to find the depreciation in year 2, you multiply the given percentage of 25 on the carrying amount of $30,000, which you calculated at the end of year 1. And when you do that, you get $7,500 as the depreciation at the end of year 2, which means the carrying amount at the end of year 2 is simply the difference between the original cost and not the original cost, it's simply the difference between the carrying amount that you had at end of year 1, which is $30,000, minus the $7,500 of depreciation you calculated specifically for year 2, which is $22,500. Okay? Right. So now that this is done, what do we do for year 3? So when you move to year 3, you multiply the percentage of 25 on the carrying amount that you had at the end of year 2. So that's what's essentially happening here. So we've got 25%, which we're multiplying on $22,500, which is the carrying amount at the end of year 2. And when you do that, you get $5,625. Once that is done, then you want to find the carrying amount at end of year 3. I've just written CA in short, and that is basically the carrying amount you had at end of year 2, which was $22,500 minus the due depreciation expense that you have incurred in the year 3, which is 5,625, and that gives you a carrying amount at end of year 3 of $16,875. Right, we now have to move to year 4. Now, this is all about speed during the exam. Given the time you've got, it's all about speed. So you have to work very fast and very swiftly and very quickly without any mistakes. So when you go to calculate the depreciation in year 4, it's the same logic. Apply the given percentage on the carrying amount that you found at the end of year 3. And then depreciation in year 4 is 4,218.75. Which means the carrying amount at the end of year 4 is simply the difference between 16,875, which is the carrying amount at the end of year 3, minus the new depreciation expense of 4,280.75 that we found in year 4, and that gives us a carrying amount of 12,656.25, which you can just simply round up to 12,656. And on that basis, the option for question 5 is the second one. Right, 12,656. Okay. Right, so I believe that clears any confusion you may have with the reducing balance method of depreciation. Now, what I need you to do is like this video and subscribe to this channel and post down in the comments what are the topics you need me to cover. Okay, and make sure to share this channel with your friends who can benefit from all the videos that I'll be uploading on a daily basis. With that being said, let's move to question number 6 now. Right. So, what's going on in question number 6? Brightech Limited purchased a machine for $15,000. The transportation and installation costs were $1,500 and $750 respectively. The machine broke down at the end of the first 2 months of usage and incurred repair costs of $1,200. The company depreciates the machine at 10% per annum using the straight line method. The machine is expected to be obsolete at the end of the useful life and therefore has zero residual value. Calculate the carrying amount of this machine at the end of year 1. Right, so if you want to find the initial total cost of this machine, it's basically the price that you pay to buy the machine plus all the costs that you have to spend or incur to get this machine ready for its intended use. So what is the intended use of this machine? The intended use is basically for usage within the business. And when we want that to happen, we also need to include the transportation and installation charges together with the total original purchase price. So if I want to find the total cost for this machine, it's starting with the original purchase price of $15,000 plus the transportation of $1,500 plus the installation of $750, which is basically adding value to this machine and getting it ready for its intended use, which is basically usage within the business operations. That gives us a total cost for this machine to be $17,250. Now, we know the depreciation on this machine is 10% on an annual basis, right? And 10%. Now, before we do that, what about the repair costs of $1,200 that we had to incur at the end of the first 2 months of usage when the machine broke down? The repair costs are not adding value to this machine. They're just repairing the machine, right? This is simply an expense. This is nothing to do with adding value to the main cost of the machine. This is simply fixing the machine so the machine works, okay? So this is what we classify as an expense. So that is why we do not worry about this repair cost, only for the fact that we know that this is an expense, and if you are preparing the profit and loss statement of the income statement, you will be reporting this as an expense, which is a repairs expense, right? So we do not worry about this. So we apply the given percentage of depreciation of 10 simply on the total cost of $70,250, which gives us $1,725, right? So the question is asking you to find the carrying amount of the machine at the end of year 1. So if you want to find the carrying amount of the machine at the end of year 1, you start with the total cost of $70,250 minus the depreciation of $725, and then you get $15,525. All right. So on that basis, it's going to be the last, second last option or the third option of $15,525. Right. That's all for today's lesson. I believe you found value in this content. Make sure to check the link in the description if you want to download this file, and subscribe to this channel and comment on other topics that you would like me to cover, and I'll see you in the next video.